In this video, I will show you about vegetation Ishimoku cycles. Vegetation Ishimoku cycle that will help you to make money. Vegetation Ishimoku cycle is the best way to make money. So the number 9, the number 10, and the number 11 will be the best training for you to make money. So let's start with the time frame skipping by 2. The time frame skipping by 2 technique. The time frame skipping by 2 technique is the fact that, first of all, you need to know this time frame. So you have like this time frame H4, H1, M15, like 15 minutes, 5 minutes, daily, weekly, and the monthly. Those are the time frame. So time frame skipping by 2 technique is the fact that you go on H4, right? And then you look at a setup. When you find a setup where you can make a decision, you go down to the lower time frame by 2. So you are skipping H1, and then in 15 minutes you enter there. This will be your entry. So you will be skipping. You skip this one. You skip H1, and you go directly on 15 minutes. So you skip this -1, then you have -2. So that's what I call time frame skipping by 2. It's the same thing that you can be looking at the setup on weekly. You can look at the setup on weekly, and then go directly on H4 and look for the entry, and you skip this daily. So you have 2 time frame that you have skipped. So first of all, your time frame must have this alignment. There are people who have time frame like 30 minutes, 45 minutes, 10 minutes, 20 minutes. I don't use those. When I talk about time frame skipping by 2, the base of the analysis is that you have the exact time frame alignment like me. Okay, so let's do it then for let's do a practical example. Let's do a practical example. So let us take the first of all H4. That will be the most common for you if you are a day trader and you want to make money. The time frame skipping by 2. So you need to look at a setup on H4. Let us look at the setup on H4. Let us say this is a setup on H4. Tenkan hit. This is Tenkan, right? A Tenkan setup here. The candle went down, then come and hit Tenkan. So we need to sell this one. So you go on 15 minutes directly, and then what will make you enter and sell you will be the inverted Tenkan. What I call the inverted Tenkan here is basically inverted Tenkan. The inverted Tenkan. The inverted Tenkan. So when you go on 15 minutes, what you need to see on 15 minutes will be, you see that in 15 minutes, when the price were going to the upside, at a certain point, Tenkan started bending down here at the beginning of this red candle. So that's when you sell at this point. And then you place your stop loss just above the top wick on the left of Tenkan, above Tenkan here, the topest wick here, just above Tenkan. And then you sell that. So that's the technique. That's exactly what I'm talking about. Okay, so let's do another example. Let's do another example. Let's take another one. Hmm. Let us take this Kijun, for example. When I talk about setup on H4, and you see here that I've wrote Tenkan hit. It can be also Kijun hit. It can be also Kijun hit. It's just any setup on higher time frame. On a high time frame, you go down by 2 time frame below on a on a bottom time frame. So let us take this Kijun, this inverted Kijun. This is an inverted Kijun, right? Uh, you go on, that was on H4. Now you go on 15 minutes. How do you know that you can enter here? What is the best moment? The best moment here on H4 will be when you realize that Tenkan started bending down before it even touched the H4 setup. So this one doesn't count, right? So it is the Tenkan that touch that when the candle are inside, the Tenkan is inside the H4 setup. The Tenkan is not necessary, it's not an obligation that the Tenkan is, the 15-minute Tenkan must be inside the H4 setup. No. But the candle must be inside the H4 setup. And then when you see an inclination down like this, an inverted Tenkan, any candle that will touch this inverted Tenkan here will be your sell entry in 15 minutes. That will be your sell entry. That's what will make you sell and enter for a sell. Okay, so that's one example. That's one example. You could have sell there, and then it will have give you something good. You can also do it on another time frame, on H1, for example, H1 to and 5 minutes. So if you see any setup on H1, and then you will go on 5 minutes, and then take the inverted Tenkan as an entry for the entry in 5 minutes. So let us look at H1. For example, let us look at this H1 Tenkan setup, this Tenkan setup H1. You see this Tenkan setup, right? When you have this Tenkan setup on H1, you go on 5 minutes. What do you look at? You look at an inverted Tenkan inclination. So you will see that in 5 minutes, Tenkan was going down, but inside the setup, you see you are inside this purple cycle. Tenkan bended himself to the upside. That bending to the upside is the signal of the market telling you that now is the moment for you to enter inside the setup. You could have entered as soon as the candle touched the setup just here on H1. You could have entered here, but you will not know exactly when where those candles could have go down till the bottom till this point. But where will you have placed the stop loss? You don't know. You don't really know if you enter here. Where do you place a stop loss? You will have went to the left and start to, oh, maybe here, maybe here. That will not be very confident. The best confident way is to wait this inclination in 5 minutes, and then the setup, the stop loss. I said, where will you have placed the stop loss? Then the stop loss now will be placed at a very fixed point during this setup. You will now go to the left and start looking at setup and stop loss point like left like this. Okay, that's the reason why you use the time frame skipping by two technique analysis. And then you place the entry just right there, and then the stop loss just below the Tenkan, the furthest VSL, V like this, V stop loss, right? Yeah, and then you got it. That will be your entry, and then you can have then your buy. You have buy till the upside. Okay, so that's how you do it for 1 hour 15 minutes. You can also do it. It's the same thing. It will be the same thing now, but I'll need to show you now for the daily. I have to show you for almost all of the. Let us look at daily, for example. Let's go on gold. If you have a setup on daily, now look at something on gold, for example. You have a daily. Then if you have a setup on daily, let us say let us take this setup on daily. This Tenkan setup on daily, right? You go on 1 hour and you look at what? An inverted Tenkan on 1 hour. You look at that inverted Tenkan on 1 hour. Inside this daily setup, what do you see? This is an inverted Tenkan, right? You have one inverted Tenkan. You have two inverted Tenkan. You have one inverted Tenkan that started playing out here. And then you have another inverted Tenkan point where the candle went and touched. Because this one was an inverted Tenkan, and this also was an inverted Tenkan. But the candle touched just this point. Okay, let us take the first inverted Tenkan on daily. This one, right? This could have been a good buy, but the stop loss placement, a good buy here just at this point when the candle touched here. But if you place a stop loss just at this point, you have get out, but the trade will have gone to your side. So you need to understand that from daily, right? From daily, weekly, monthly, the retracement can be sometimes a little bit strong because it's actually a daily volume, a daily push. So you need to leave some space, sometimes some space for your stop loss to breathe. If you are a trader who enter in for daily setups like this, you need to leave some space. That's just the remark that I want to tell you about the stop loss. Don't be dumb. 4 hour is not like daily. Daily setup is another thing. 1 hour setup is just small. Sometimes it doesn't happen. It doesn't make you have a huge stop loss. So if you want to make entry in 1 hour and you know that your setups come from daily, don't be too ignorant, too naive. Be aware of the fact that daily has sometimes some retracement that are high. But that doesn't mean that you are wrong about the direction. You are actually right because you are inside a setup at this level. So that's just a remark that I want to put you to emphasize with you. And the second Tenkan inclination, Tenkan inverted Tenkan, work very well. The setup has not been tested, so that's it. Okay, that is a little bit it. So now I want to show you another thing. Let us say that in daily, right? You want to know where does the market reverse. Sometimes I can take setups like Tenkan, but you know that Ishimoku has many setups. You have Kijun setup, you have SSA setup, you have Tenkan setup, you even have SSB setup, right? This SSB setup, right? But you also have the empty setup. When the candle are inside the empty space like this, how do you know that the price is reversing? You are in daily. The best way to know is to use the same technique. Like you mark the empty space and you know when the price is reversing the downside. use the time frame skipping by 2, time frame skipping technique to know it. Let us take, for example, from the past. Let us take, for example, here, this huge, big, huge point. You go on 1 hour, you skip the time frame by 2, you go on 1 hour. And what will you see? You will see H1 bending down. When you see the Tenkan H1 bending down like this, you know that that's the best time to sell. That's the best time to sell. That's for very big analysis, but not just big analysis, but you need to have it as inside your mind that the empty setup, like I can literally say empty, when the candle is the empty, you go also on inverted Tenkan H1 to find your entry. It is the same thing that happened to this other setup. It is the same thing that happened also to this other setup. Okay, that was actually an inverted Kijun. That's not the MT, by the way. Let me take the MT on daily. Let us take an MT. When the candle doesn't touch any Ishimoku line, let us take this one. How do you know at this black line when the price will start reversing to the downside? It can even help you take the profit. You see, as soon as at this point, exactly at this point, when the candle touch the inverted Tenkan, yeah, you can literally sell larges. That's the risk reward of 2 if you let it go down till the end. That's the risk reward of 225. It's not bad, right? Even though it's a big stop loss of 29,000 pips. So that's how you know that the market is about to reverse. That's a little bit what's happening now. We are inside an empty space. We are inside an empty space. And then the stop loss must be placed here. If you look at daily, the now daily, let me erase all of the graphics. If you look where we are now, we have double rail, right? We have double rail. So we have the double rail, rail in the cloud, rail on the TK. And then you are inside an empty space. Okay. So we are inside an empty space. How do you know that the price can reverse here? I don't like to take too much reversal on gold because it's actually an asset that goes up. But you actually know by knowing that this Tenkan inclination is making the price reverse to the downside. Okay, you can actually target maybe SSB here. That would be good. Okay, now let us do the same thing on weekly. Let us do the same thing on weekly. If you look at a weekly setup, let us go on Bitcoin this time. Let us say you go on a weekly, you have a weekly setup. Let us now take another setup. Let us look at, let us look at this SSB setup. This weekly SSB setup, the just right here, this one, weekly, we are in weekly, right? Okay, we need to go to skip a time frame by 2 and go on 4 hours to know if the price reverse there. You see what happened when the SSB setup has been. So what I can do is that it's not only Tenkan that can be hit, even SSB can be hit, right? You go on H4 and what do you look there? So what will remain the same will be the entry, but what can change will be the setups. The setup can be very variants, can be different. And then you go on H4. H4, the entry, if you enter, if you are H4 trader, you could have entered from this point. The stop loss would have been at this week. And then till now, the take profit will have been just 1.5 maximum. We didn't go that much till now to the upside. You know what I mean? That's a little bit late. So that's one example for this is an inverted Tenkan. Because what you need to know is that why do I take the entry just right here? Is that since this Tenkan H4 started bending to the upside, the only time when we started touching the Tenkan is here with the candle. So that's the only time when you started having a touch since this upward move. I'm not a fan of taking, for example, this candle. I do not test this candle. I prefer to take what I tested. I do not look at if I can take maybe this one. It can work, but you know, it can work just because of the fact that the setup has always been touched in weekly, and then this one is just a mere continuation. So let us go on weekly again. We can actually know when the Bitcoin can reverse itself. If you look at weekly Bitcoin like this, right? You ask yourself, when can it reverse if it has gone too far to the upside? You know that you have two ways to look at if a market can reverse. The first way is the way that I told you, that you need to look at a resistance to the left, right? The candle are moving to the upside like this. You look at the resistance to the left, the highest resistance to the left, what I would call VRS, because it is a V like this and is a resistance, R for resistance, right? The candle are doing a sort of V shape like this, the highest point of resistance. What you need to look at now is that this actual Tenkan, this is the candle, this actual Tenkan must come, and if you put an horizontal just at this level, when this actual Tenkan cross this resistance are touched at the same level, you need to start looking at this candle. Which one of them can give you the reversal, right? So at this level, the move is already gone too far. So the market must reverse as soon as we meet, as soon as Tenkan reach the same point level of this left wick. So that is one technique, right? You often see the market reverse as soon as Tenkan meet this resistance going to the upside. So that's one technique. But as soon as Tenkan meet this resistance, the markets kept going to the upside. That happened a lot of on NDCs and gold. So the market did not reverse. So the second technique to know if the reversal can have is soon to happen, you can then use the time frame skipping by 2 and look at H4. So we are in weekly here. So if you look at this empty candle, none of this candle touches any Ishimoku line. So you go on H4, you go and look at if you have an inverted Tenkan there. When you have an inverted Tenkan there, you realize that at that level, you have a lot of mini inverted Tenkan. So that gives you a lot of reversal point where the Bitcoin started having exhaustion, right? You have 1 year, and it's very normal that you have a lot of reversal point, right? That you can take. You have another. Let me take another color. You have this inverted thing can just just here like this, right? You have a those inverted thing can those inverted thing can many of them gave you some pips. If you are a Bitcoin trader, you could have known when the market can reverse many times, like 4 times, and it's very normal. As I told you, when there is a setup, when there is a setup on a time frame like weekly, when you go on lower time frame, the market will not reverse one time and go to the downside. It will reverse like 1, 2, 3, 4. That's what I call sometimes 1, 2, 3, 4 ticket course. You know that, you remember about that, right? So that's how you can know that the market is reversing to the downside. So now let us do for the monthly. For the monthly, you need to go and enter on a daily setup. Let's also do it on a monthly. You can do the monthly on gold. No, well, we will not have a good example. Let us do the monthly on Bitcoin. So monthly, for example, what would be interesting to know here is that when does this market stop the halving? So when the market went above this all-time high here, and then the price was inside the empty space, right? How do you know that you could have sell the Bitcoin or withdraw all of your Bitcoin on daily? You go on daily and you just start looking at above this all-time high. When I will see anything can bending to the downside, like inverted tenkan, that will be the signal, the first signal. And you know that since it is a monthly setup, that we the empty setup on monthly, what I call empty, I can take like this empty setup on monthly, right? The inverted tenkan on daily can be 1, 2, 3, 4, right? You have 1, 2, 3, 4, literally 4, right? But each of them shows you what the reversal point, the reversal signal, the reversal indication. So you can sell if you are actually a Bitcoin trader. You can start selling from here, and then you put in mind that for the first one, you can stop here and then give me another one, but your stop loss will be treated because we have a monthly setup. Monthly setup, you know that the power of the buyer were still high. So those high are been broken. Even if the market will reverse, the high are broken a little bit, because people still have hope that the Bitcoin will keep going to the upside. That's why they keep buying more price, more price. Till finally there is no more seller to sell them anything here. And then uh buyer stop stop buying more price, because you keep buying because there is a seller that will sell you something here. But as soon as there is no more seller to sell you something here, the market go down. So those are the entry. So at the end of the day, what I'll try to tell you is that all of these are basically entry. That's the best way for you to make money. Entry. This entry made me money already. If you look at the Telegram group for the setup signal, I made money with it. You will see some of my entry, many of my entry are on the embedded thinker. So the time frame skipping by tool is a geometrical multi-time frame analysis, a non-linear multi-time frame analysis. I call it non-linear multi-time frame analysis because you know that if you have H4 here, you have daily, you have weekly, you have monthly, you have H1, you have M15, and you have M5, right? You know that you have the setup on, you look at the setup on H4. You need to skip one time frame and go to the second time frame to have your entry, right? So it's not linear in terms of the fact that if it would have been linear, you can actually go look at the setup on H4 and then go and enter on H1. That will give you a line analysis. Like you go set up by you go time frame by time frame. But now that's a not a multi-time frame analysis. Like people say top down analysis. That's more of a non-linear multi-time frame analysis where you skip one time frame and go to the next time frame without even looking at nothing at the middle time frame here. That's what gives you these techniques. That's the technique of time frame skipping by two technique. That's the non-linear. Linear means that if you are in monthly, you go directly weekly on this line, right? But since it is non-linear, you skip weekly, you go direct, you go instead on daily. You skip one point, one checkpoint. Okay. So that's that is what is time frame skipping by two technique. Non-linear multi-time analysis technique means. So another thing is that what I'm trying to give you is that I'm trying to make you a genius, a financial analysis genius, a genius of fractal geometrical life movement analysis. Why do I call it genius of fractal geometrical or geometrical fractal analysis? So what you need to know is that the market is fractal, right? When you have a market like this, what we see on the chart are just rectangle. A candle is a rectangle. Everybody knows that the candle is a rectangle, a vertical rectangle, right? So this candle, when you see one candle on H4, the same candle will appear on H1, but 4 times, right? That's what we call fractal. Fractal is inside the nature, like on pineapples, on some flowers, on some elements on the nature, like I told you. So it's the same element that appear on a lower scale, but many times. That's what we call fractal, the fractality of the market. So in the bigger scale, you see one rectangle, but in the lower scale, you see the same rectangle, but 4 times. It's the same thing. In 15 minutes, one candle on of 1 hour, it is 4 candle in 15 minutes, like 4 rectangle. If you go on 5 minutes, one candle, one 5 minute candle, one 15-minute candle in 5 minutes, it is 3 5-minute candles. That's why we call fractal. It's just the number of candle increase, but it is the same rectangle that is being plotted. So now, first of all, you have the fractal, the fractality element on the financial market. And secondly, you have a geometry. A rectangle is a geometrical figure, right? Another thing that happened for another thing that happened for the on the financial market is just that it is not just the rectangle. You also have lines of Ishimoku. You have on those lines, you don't just like have horizontal line or vertical line. You also have one line have horizontal displacement and inclination displacement. So the way it moves, and those are moving line. They are not just statics that they don't move over the time. So basically, you have fractal, you have rectangle, you have line, and you have movement. All of that in one analysis, right? That gives you fractal geometrical analysis. Fractal geometrical analysis, FGA. I can give a FGK. Fractal geometrical analysis. But live fractal geometrical analysis, because those movements happen within the time, right? So that means that what will help you on the financial market will be more mathematical analysis than any sort of volume. Some strategy on YouTube, popular strategy on YouTube talk about liquidity. Liquidity exists, right? Liquidity is the fact that when the market moves to the upside like this, ICT, for example, say that there are orders here. When you say there are orders just below every low of the market, and you hear about liquidity, I mean, it's real because they are contracts. They are contract. If you never heard about court report, the court report, let me show you a court report to show you that those liquidity are real. First of all, those contracts, for example, if you see, for example, this is a commitment of trader data. Those are data. When we talk about data, we talk about numbers like 100,000 contracts to buy gold contract. It's like you want to buy 50 basket shoes, 50 shoes, right? They will give you 50 receipts for each shoes, one receipt. Those receipts, like receipts, prove that you have bought those shoes. It's the same thing for gold, right? Or for USD GPY, 1,000 contract shows the number of people who buy the number of buyers. So when you look at the commitment of traders, the data that shows those number of receipts. For example, if you look at here, you see here large speculator. Large speculator are just traders like us who try to predict the future of the market, right? Speculate about the movement of the market. Here you realize that this number change. This one is 36,418 contracts. These are the number of contracts that have been bought, right, at this point. When they bought, like, for example, 66,000, and then they come here and they sell 64,000. When you see minus, it means that they sold, right? They buy at the bottom many contracts, then they sell. Those are liquidity. Another software that shows liquidity very well, it is the Bookmap. This software, Bookmap. You will see that all of these red line shows where the orders are placed, those contracts are placed. YouTube shows this very well. This YouTube video, for example, you see that this guy will show you this red line. This is the market, right? This red line. What he tried to say in this video is that he's saying that there are contracts that are here waiting to be bought. So what happened is that right? Yeah. Liquidity exists. What I'm trying to say is that liquidity exists. No contract exists. Like those volume factor, like liquidity at the bottom of each there is liquidity here. Yes, there is liquidity. Like there is money to be taken out. This is where the order block will be happening. I agree totally with that. And there's another technique, there's another concept that is called absorption. Absorption is the fact that at this liquidity point, the absorption will happen. What is absorption? Absorption is just the fact that let us say, for example, you are selling shoes, right? You have 100 shoes, right? and here is your price. One shoes is 20,000 francs CFA, but your lowest price on which you can sell one shoes is 16,000 francs CFA, right? So let us say that it's not everybody who will come to you and then buy your shoes one shoes, basketball shoes. Like one shoes at 20,000. There are people who negotiate your price. Like sell me it at 18 or 17, reduce the price, please. So it means that at this price of 20,000 per shoes, you can even sell 40 shoes at this level, right? But most of your shoes will be sold at your lowest price, like 60 of your shoes, because you have 100 shoes. 60 of your shoes will be sold here. So actually, if we take a graph, you will see that you sell shoes based on price. Some people, if you tax even one shoes at 25,000 a year above, maybe only 5 people will buy it at 25,000, but 10 people will buy it at 20,000. Another 10 people will buy at 18,000. Then it will remain maybe 15 people will buy it at maybe 17,000 francs CFA, right? But your lowest price as a seller will be 16,000. That means that you have a huge block of people of buyers that will buy your shoes here. So that will create a sort of congestion, a sort of consolidation, a sort of regroupment, a sort of assembly, a sort of fan club of 16,000. And that's where we say that most of your client bought at 16,000, and we call it absorption, because they have absorbed more this price, because they have been regrouped themselves at one point, at one common price, the lowest price of your lowest acceptable price. And that's where all of you guys seller in the market sell maximum, your minimum price, your maximum will be 16,000. If one buyer go to another shop and say, okay, this one told me 16,000, and then the next seller tell him I cannot go below 16,000. The market consensus, the market consensus means that every seller in the market agree that we don't go below 16,000 to make profit, because if we sell at 16,000, we only have 3K profit on one shoes. That's our minimum. We cannot go lower than that, so that the buyer also know that this will be the maximum. So every buyer will say that, okay, since this is the lowest price of all of these seller, let just all buy at 16,000, so that I don't buy too expensive, and the seller said, oh, okay, I don't just sell too much cheaper. So you have more accumulation of many buyers here. That's what is being shown on this YouTube video. You will see that at the center point, when the video increase, you will see that close to this red line shows the lowest cheaper price of the market. You will see that you see a big red ball. That shows that absorption of what sellers have sold all of their shoes at this price. That's why you see a big round circle here compared to above here. That's their minimum price. That shows absorption. This absorption shows that buyers have bought all of the price on 16,000. So absorption exists. All right. What I'm trying to tell you is that absorption, liquidity exists in the market. If I remove Ishimoku like this, I agree. There is somewhere here, there are contract. There are speculator, there are hedge fund, there are banks who are trying to buy the Bitcoin here. BlackRock trying to buy something somewhere here. There are many people who buy on Binance everywhere on those platforms somewhere here. But the problem is that on this trading view graphic, there is no showing of any 36,000 contract, 36K contract anywhere on this graphic. Only geometrical figure have been shown on TradingView. Do you see that? There is no liquidity that is being shown that you can see with data. There is no numbers above this high, below these lows, right? So it means what? You also don't see absorption with your real eyes. You just accept this concept because that's actually logical and real. because the what trading view shows you a graphical figures, but the behind these graphical figures is a huge data, mathematical data that has been happening for these graphical figures to be shown, these geometrical figure to be shown on TradingView. But on TradingView, you don't see it. I didn't plot it. I didn't see it. I didn't plot it like graphically for this graphic that I show you here, right? So it means that you only have geometric. You can only deal with geometric front end. Nobody can argue with it. You only deal with geometric. So since you only deal with geometric, it means that you only have rectangles, and rectangles. And when you plot a Shimoku, you have lines. It means that you need to increase your geometrical intelligence to succeed, because you don't actually see any data. You make decision based on geometric. You cannot start, okay, if you cannot start like assuming that at this point on Bitcoin, we have like 100,000 Bitcoin that is being buying now. You have no data about that. Actually have no data on this screen. I didn't tell you to BTC heatmap or crypto heatmap. I didn't tell you to go on another website and start to look at the Binance BTC liquidation heatmap to try to look at how many Bitcoin is been buying now. No, I told you that if you remain only with TradingView screen, only with the TradingView screen, you only have rectangles and lines. And that is a geometrical analysis. It has nothing to do with volume, with financial market. It has not, it's elementary geometrical analysis. So you need to elevate your geometrical intelligence to master the understanding of what is happening. If you don't go anywhere here, and even if you go here, how will you make the decision? How will you make the decision? Anyway, I'm not an expert on reading the data yet to make a decision based on data. But what I'm trying to tell you is that by only looking at a trading view graphic, a trading view graph, a trading view screen, you only see basic elementary rectangles, lines, inclination that move over the time. And you have fractal elements. And then you need then to elevate your geometrical intelligence, your fractal geometrical intelligence to interconnect time frame and geometrical element to take a decision. That's what I'm showing you. That's how I try to help you to become a genius on doing that. So what I'm trying to show you is actually a part of the genius part of you who can use this technique. And the only way for you to do that is to understand it and meditate. I use a lot of visual meditation. So, but you don't have to think more because I've come up with this proving ideas, proving techniques like time frame skipping by 2 and all of this. So what I'm trying to say is the number 9, the number 10, and the number 11 will give you the money that you need. So we started with the number 9 here, the time frame skipping technique. Then we go and look at the cycles, the vegetation cycles. But this is also one part of the vegetation cycle. So with that said, I think I'm done for now.